All right. Hey, everyone. It's Anthony Brown here, Associate Broker with Royal LePage Atlantic. Thanks so much for tuning in. I put out informational content about our local real estate market here, trends in the industry, things like that. I love chatting about this stuff, guys, and I really appreciate that you took the time out of your day to watch this video. If you can do me a favor, if you learn anything from this video, if you like the content, can you go down below, hit the like button, maybe subscribe to my channel so you can stay in the loop with new content that I'm putting out. And I will put a link in the comments below if you want to book a call with me, if you want to chat about your real estate questions, questions about the market, anything like that that we can be helping you out with. There will be a link in the comments below where you can book a call with me at a time that works for you. In today's video, I want to chat about the upcoming rate announcement from the Bank of Canada and why a rate hold wouldn't be the worst thing in the world for buyers in our market. So that might seem counterintuitive to a lot of you out there. If you're looking at the real estate market, if you're watching the Bank of Canada interest rate announcements, you might say, Anthony, a rate hold does not help people, but I think it does. So going back into the June rate announcement when the Bank of Canada dropped rates by 25 basis points, I was pretty certain that the Bank of Canada was going to drop rates. Coming into the July rate, I'm split 50-50. Inflation's not quite as low as people thought. Employment's a bit better. The bond market's a bit better. There's a lot of conflicting data. So I'm 50-50 on whether or not the Bank of Canada will drop rates or hold rates. They won't go up, but they'll drop them or hold them on the July announcement. But coming into the summer, so the typical real estate market is very cyclical. Fall, the market's a bit busier. Winter, the market drops a bit. Spring, the market goes way up. Summer, the market typically drops a bit again. So the summer and the winter are typically the two times where I see a bit of an advantage for buyers to be out there looking, for buyers to try to get offers in on properties and maybe have less competition. And if we see Bank of Canada hold rates at the July announcement, so think about this. A lot of people are on vacation. A lot of people are taking time off work. A lot of people are away. There's less activity going on right now, and we have probably the most inventory that we've seen in a handful of years here in the greater Halifax, Dartmouth area. So there's more listings. There's going to be less buyers coming into the summer months. So if the Bank of Canada holds rates in July, that creates almost the perfect opportunity for a buyer to get out there and buy a home. So yes, you're going to have a bit higher of an interest rate in terms of your finance rate for your mortgage. But if you pay $50,000 less or $25,000 less for your home, so if you buy your property not in competition, if you get a bit of a deal on it, if there's all these things that bring the purchase price down a bit, all of a sudden that 25 basis points or 50 basis points doesn't really matter if you look at the interest rates. So even though you would pay a bit more on your interest rate, the fact that you can get into a property not in competition, maybe at a bit of a discount, you're not paying over asking, there's not 13, 14, 15 offers. There's an opportunity for buyers out there this summer. If the Bank of Canada doesn't drop rates in July, there's an opportunity there. And I think buyers should really consider that. I love chatting about this stuff. If you guys have any questions about the market, about your situation, anything at all that I can ever help you out with, please don't ever hesitate to reach out. We'll catch you on the next one. Cheers.